This week, tariffs are shaking up the market, so should retirees be pulling out of stocks, or is there a smarter move? We'll be breaking it all down just right after this short break.
Building relationships is the way Mutual of Omaha has grown into one of the leading financial services companies in the world. Our reverse mortgage wholesale division is proud to carry on this 100-plus year tradition. To your borrowers, a reverse mortgage is more than a transaction. It's a promise of a better, more stress-free life. Our goal is to provide you, our valued client, with the best service and support possible so you can focus on helping your borrowers achieve the retirement of their dreams.
Welcome back. Well, after last week's wild ride on Wall Street, a lot of investors are still trying to catch their breath. The markets took a serious hit last week following a new round of aggressive tariffs announced by President Trump. In just 2 days, the S&P 500 shed an eye-popping $6.6 trillion in value. That was the largest two-day drop in market history. The Dow, it dropped more than 2,200 points, down 5.5%. And the NASDAQ officially dipped into bear market territory, sliding nearly 6%. Now, all in all, these tariff bombshells erased nearly $10 trillion in market value and sent investors scrambling for safety, mostly into U.S. Treasuries. That flight to safety, it pushed mortgage rates even lower. But keep this in mind, this is not a one-way street. Both stocks and treasuries have been seesawing wildly. But before we continue any further, just a quick heads up for any homeowners, viewers at home who are considering some of their financial options in retirement or looking for financial guidance. I am not a financial advisor. I am a reverse mortgage commentator and trainer. And also, yes, I do believe in the proper and responsible use of reverse mortgages. So our advice is to always seek the advice of a financial professional before you make any big decision. So let's talk about what really matters. Now, if you are retired or getting close, then your nest egg just took a big hit. So what should you do? Well, there is the textbook answer, and then there's real life. Now, financial experts will say, stay calm, don't sell in a downturn, and that's how paper losses become realized losses. But emotionally, well, that's easier said than done. When markets plunge fast, panic sets in, and that kind of fear-fueled selling can wipe out your shot at recovery or even long-term growth. Now, take what happened just days after those tariffs were announced. President Trump hit the brakes and he paused new tariffs for 90 days and cut reciprocal tariffs to 10%. The result? A massive rebound. The Dow jumped 2,900 points, the S&P soared by 500, and the biggest gain since 2008. And all this despite the tariffs on Chinese goods initially increased to 125%. But don't break out the champagne just yet. Diane Swank, chief economist at KPMG, told the New York Times, "This is nuts. Damage done. Market relief is just a head fake unless the administration makes a major course correction." And she may be right. CNBC reported that last Wednesday's market surge wasn't driven by optimism, but by the mother of all short squeezes. A short squeeze occurs when investors bet on a decline by shorting the stock to maximize their return, but then they're later forced to buy back those stocks to cover their position. Now, when large institutional investors or hedge funds do that, it pushes prices even higher. So will folks who sold in the panic be regretting it now? Potentially. Either way, it's easy to see why retirees might feel rattled. So what is the alternative to panic selling? Certified financial planner Katrina Salter told Fortune she's been advising retirees for months to build up a cash cushion, ideally enough to cover a full year's worth of withdrawals. And that way, when the market dips, you're not being forced to sell at a loss. Sound advice. But what if you don't have that cushion? Well, there may be a solution that's sitting right above retirees' heads, their homes. Now, specifically, a standby reverse mortgage. Now, that strategy was first introduced by financial planner Harold Avinsky, and here's how it works. You set up a reverse mortgage line of credit, but technically this is the federally insured home equity conversion mortgage, or HECM. But you don't touch that line of credit, you just let it sit there and grow quietly in the background. But then when the market does tank, instead of taking money from your investment portfolio, you tap the reverse mortgage line of credit instead of making those stock portfolio withdrawals. So once your investments recover, Then you can go back to your portfolio withdrawals as before and then let the line of credit alone. But here's the kicker. Any unused portion of that reverse mortgage line of credit grows over time, month by month and year by year. Evinsky's approach flips that traditional reverse mortgage idea on its head because it's not about last resorts. It's about having a smart, strategic backup. A financial parachute you hope that you'll never need, but you'll be glad if it's there if the markets do turn south again. Now, back when Evinsky first floated this idea, there was a lower cost HECM option called the HECM Saver. It came with substantially reduced upfront fees, but gave access to a smaller credit line. Now, that loan is no longer around, but the strategy still holds water. Today, reverse mortgages are quietly gaining ground in retirement planning circles, especially when advisors recognize that the home may be the largest asset worth leveraging. And with more economic turbulence on the horizon, having more options, especially ones that may help you stay calm in the storm, could be the smartest move of all. Now, what are your thoughts? You can leave your comments in the comment section below. And reverse pros that are watching right now, please share this on your LinkedIn network. We appreciate those of you that do that. We have a YouTube channel. Be sure to subscribe. That way you never miss any of our latest breaking content. And each and every week, we curate the most recent and relevant reverse mortgage news for mortgage professionals. That's HECM World Weekly Podcast. We have both an audio and a video edition. Listeners can listen and subscribe on Apple Music, Spotify, or on Podbean. Well, that wraps up today's show. Thank you so much for joining us. And be sure to return next week for more reverse mortgage news, commentary, and analysis you'll only find right here at HECM World. Have a great week.